This is Sacha Pradyuman of Cirrus Research. The latest issue of the Signals report is just out. The Signals report is an asset allocation focused report. It looks at things such as stocks versus bonds, large caps versus small caps, growth stocks versus value stocks. The title of this issue, Broader Market Indications Bolstered by Lower Rates. When we look at our stock versus bond allocation model, it remains anchored overweight risk assets. In other words, the equity allocation currently is around a 71% handle. That is actually a very strong positive outlook for equities. The long run average in this model is around 49% allocated to equities. So a couple of things here. One, you've got yourself the bottoming of the profit cycle. The earnings appear to be working well. The credit markets seem to be fairly healthy, and the market's bracing for the beginning of an interest rate cut cycle. So these things basically stack up for a pro-risk assets environment. One important thing that clearly we're all struggling with is leadership in the market. As everyone's eyes are fixed on NVIDIA, the question is the market as intensely crowded as it feels? Based on our measures, this crowding quotient number that we look at, this reading is benign, but we do know if you disaggregate this reading between large, mid, and small, the model starts to tell you very different things. In other words, we can agree that in the large cap market, it is very tech heavy. But if you look across the capitalization spectrum, such as mid and smaller stocks, what you'll see is a very different accounting. In other words, more industrials, more financials, more healthcare. So these things tell us that the market is broadening. The question is whether or not this broadening that we've been witnessing in mid and small cap land begins to spread to the larger cap arena. I think that is the challenge as we get to closing this year. Take a look at the full report, and as always, happy to take your questions. Thank you.